Everyone. Hope you're all well. I will start the session in a minute just because there's a few people joining, but they've had some tech issues, I think. Notwithstanding that, usual rules apply if it's okay with everyone. Cameras off, mics are off if that's okay, just because it gets a bit confusing. Bung questions in the little chat box at the bottom. Happy to field those, hopefully as we go along the journey, and if not, certainly at the end. Okay, well, I'll crack on and I'll jump into the presentation just so you can see the lovely delights of IR35 I want to run you through today. Give me a second. Right, hopefully everyone can see that. And let's begin. Right, okay. Agenda for this week. It's fairly short and sweet, to be honest. I wanted to just run through the changes that we now know about with IR35, options that are going to be available post the changes in April next year, changes to the furlough scheme, and they're really just some questions and answers. So I guess this is more targeted at our contractor clients and micro businesses, hence slightly different audience tonight. So let me try and crack you on with some of the points that we're going to cover here. So just for the history, in case anyone doesn't know what IR35 is, apart from being one of the worst pieces of legislation ever drafted, it was introduced back in 1999, so 20 plus years ago now, with a view to it testing whether you're self-employed or employed. Always been an ongoing battle for the government because they're just so ill-defined in terms of the rules and the law, hence it's become almost impossible to apply IR35 properly. How successful has it been? Well, here's the easy answer. It's been absolutely terrible. I think if you look at case law and look at it over the course of time, they typically end up attacking, I think over the last 20 years, there's been about 100 cases. And, they're never publicised because clearly the revenue never win any of them. So again, this is the reason why IR35 is due to change. Equally, and this was pre-COVID, they were suggesting they were going to target £3 billion worth of extra revenue in tax and national insurance. Sorry, I've got a cold. I'm not entirely sure where they get these numbers from. I mean, if you look at my math, I think this is probably typical for a subcontractor or freelancer bidding for 100 grand a year in fees, going through a limited company. Typically, you'll net about 70% once you do salary, dividends, and some expenses planning. So you end up paying about 30 grand to revenue and customs, plus the VAT, which just goes around in a big cycle as well. In a permanent role, you're not going to get 100 grand, you're probably more likely to get 80 grand. And from that, you're likely to probably spend or incur about 25 grand worth of PAYE. So mathematically, I'm not entirely convinced the revenue got their sums correct and that they're going to get the value that they're proposing to hit the bottom line for tax receipts, unless people get gross to gross contracts flipping into salary roles, which is something that is almost unheard of. And the roles we're seeing are being offered at substantially lower rates of pay. Hence, I don't think it's going to really happen. You heard about the SES test, checking self-employment tests. Is it likely to help? Anyone who's seen or gone through this in the past, and if you were at the session that I did in London, again, when we were all allowed out to play, I think we proved that it just doesn't work. The test itself, if you put in that you are able to do substitution and have engaged in substitution, you pass the SES test. It almost doesn't matter if you put in any other answer to any other question, you pass. On the other hand, if you suggest that you may not have the right of substitution, doesn't matter how fantastic you answer every other question, the test will fail you. The stupid thing then is you then get a test result at the end of it, and then you print it out, you have a look at it, see where you failed, see where you passed, and because it isn't recorded anywhere, you go back in and you redo the test, and you print your digital certificate saying that you passed the test. So for me, no, it won't help. It's just learning nonsense. As I say here, the idea is to try and suggest that it's demonstrating the true nature of the contract, but it just doesn't help. So I wouldn't even bother doing it unless you just want to do it just for fun. So let's look at what are the proposed changes. They were already proposed to come in at the beginning of April this year, and for obvious reasons that didn't happen. So let's look at what they are proposing. Moving the testing away from subcontractors, contractors towards the end client. So that would mean big bank, big industry, big business will have to do the determination and do the tests for each and every client or every contractor they're working for. IR35 is staying the same, so nothing is fundamentally changing. If you look at the test for employed versus self-employed, all the other sub-tests in terms of substitution, use of own equipment, and all the other parameters that are already there in place, they're not changing, they're staying as they are. The fundamental difference is that it just goes back to the end clients and it moves it away from the end contractor. So it's changing who makes the decision. Any contractor who's issued a contract, probably I would imagine from the tail end of this year, is going to fall into the same camp that we saw at the tail end of last year, where the end client's getting a bit twitchy, a bit nervous, wondering whether you're going to be inside, outside IR35. And as we saw with all of the banks, they just ran for a cliff and jumped off like a bunch of lemmings that they are. And then when one did it, they all did it and they followed suit. Quite a few of them since then have had a change of heart. If you look at Deutsche Bank, they rescinded their IR35 challenges and just reverted back to staying outside of IR35 all the way through, which again I think was the right decision. And certainly with COVID-19 here and everyone working from home, if you look on balance, the difference between a normal employee who's used to being sat at a desk from 9 in the morning till 5:30 at night versus a contractor who's happy to just work anywhere, anytime, and has the skills, capability, equipment, and works under their own steam. So I think that's why some of these people made that decision. There's a lot of talk from David Davis about trying to park IR35 for 3 years, which again, I think everybody with a brain thought was a good idea. But unfortunately, just purely on balance, based on the fact that I think we need more tax revenue as a result of the huge costs that we're incurring at the moment. Unfortunately, we are going to see this all changing. So let's see what clients aren't actually affected. So if you're engaged with any clients with £10.2 million in turnover or less, they would not have to determine your status. If they had less than £5.1 million on the balance sheet in terms of assets, or they had less than 50 staff. The criteria here is that you have to fail 2 of the 3 in order to have to determine the status for all of your contractors. So if you're a multi-million, multi-billion pound business, global, you're more than likely going to fail that test, at least on 2 of them, and therefore you'll have to do the determination. So all larger clients will have to do that. There's a lot of companies out there that are providing SDS services, solutions, such as a lot of the insurance providers that we've talked to you about in the past. So Kingsbridge, Consohara, and then there's a lot online as well that are offering all sorts of weird fangled systems and solutions. The ultimate thing here is the determination rests with the end client. So you have to engage them, make sure that relationship's strong, and empower them to help you. I think, as we all know, we've seen this, so we know that this is taking place from April next year. As I've said, it's going to be a huge headache for all of the HR departments. We've had another year runway to try and get our heads around this. The human resources teams are there to deploy their staff. They're not there to understand corporate law, corporate tax law, and legislation that is confusing even to the best of people that understand it. So I just think there's going to be a lot of people, going back to the previous slides, where they're just going to run for the hills and jump off a cliff. And as we've already seen, and again, I alluded to this before, if anyone here is in the banking sector, they just had a complete lockdown. Everyone who was trading outside of IR35 had to get kicked out, had to move on, and just basically had no option. So what are the risks that I see in terms of moving forward with any different way that the revenue wants you to? Revenue have said that if you do take a role from a previous contract that's been outside and you move inside, they're not going to challenge it. They're not going to attack it. If anyone's old enough and remembers the business entity test, which was only around probably about 5 years ago now, within that, there was almost a flip, direct reverse of this particular statement. You had a series of 20 questions, and one of those questions was, have you ever worked for your end client as an employee in the past, with a view of you moving to a contract? If you answered yes to that question, you started your test on minus 20 points. And the objective was to try and get to at least 10 to stand a remote chance of saying that you were outside of IR35. To put that in context, if you then had professional indemnity insurance, you got 1 point. If you had your own home office, you had 1 point. If you could demonstrate financial risk, you had 5 points. So as you can probably see, the reality there is you stand no chance, or stood no chance, of ever getting to 20 points and being outside of IR35. So my fear here is the direct reverse. If you take a contract and then move to an outside to an inside contract, and the revenue ever asks the question, and it's a very simple question, have you ever traded outside IR35 with your end client? Yes. Then that could trigger an investigation. So I don't believe that they will just let people fly into the new regime. Accepting a role, moving from contract to permanent. So again, I just think that the revenue will come up with some sort of way to test and review what's actually happening with people. So bear with me a second, just trying to mute somebody. So I think that's a big risk, that you just move from a contract role to a perm role with the same end client. For me, the revenue could just see that is a direct flip to an employed role, and could then challenge that downstream. Take a similar role just with PAYE, so that could be going through an agency, an umbrella, or just off the payroll in terms of with your end client, but just in some sort of payroll scheme. So I think all of those are a bit of a risk. What's everyone suggesting you do? So your end clients are more than likely saying to you, take a permanent role, there's no hassle, here's the income, here's the package we'll offer you. If you've done the mental math or you've done the actual math, we're seeing a lot of these where a typical day rate contractor on, let's say, £600 a day, so circa 140, 150 grand a year total revenue to a company, typically has been offered something in the order of sort of 80 to 85,000 as a salary. Okay, there's some benefits thrown in there every now and then, but then one of the key benefits you used to get in certainly banking sectors were bonuses, and I don't suggest there's going to be many of them this year. Move to an umbrella company. An umbrella company, for those that don't know about these, they're just a replication of payroll. All they are is a third-party payroll solution. If in reality, all you're then doing is paying another company to run your payroll for you, and that's it. There's no benefit, there's no upside to it, there's no employee benefit wrapper. It's just a payroll function alone. Try and stay contracting. Certainly, if you're working with a smaller business below 10.2 million turnover, the likelihood is you should be able to try and work with them on an ongoing basis, because you're of no risk to them, or of no more risk to them than you are at the moment. If it's a large client, you still have the right to complete a status determination, and if you truly believe your contract is outside of IR35, there's no reason why you shouldn't do that, and I certainly recommend doing that. Collaborate with peers. A lot of our clients are doing this, and I'll come on to one of our particular clients that's got something in the wings on this. Work under a statement of works, have some master service agreements, try and collaborate, really just try and build a team rather than just being deemed as one person, as a one-person day rate contractor. Try and build a project and deliver that project with multiple people, which again removes the whole emphasis away from IR35, because you're then a true entity. Or if you want to piggyback under a consulting business, again, that can deliver an end solution to your clients rather than just you as one person on the seat. Now, here's one of our clients that, goes without saying, you've got to influence the process. You can't just expect that your client's going to do what you want, because they have no idea what they want, and they're just there firefighting, trying to overcome the whole issue that we're all seeing, or will be seeing, as we get towards this. So what's this? So one of our clients, a company called Grid, they've built a business that was actually ready for taking everything under its wing from when IR35 was due to change back in April this year. So they've got a solution. It's a big sort of Accenture-esque that can sit between contractors, business solution providers, and agencies. And it can be the conduit or the link between all of these parties, and removing a lot of the headaches for IR35. This isn't an umbrella company. That's one of the key things to note that they've said for me to say. This is a true business that has true relationships with end clients such as Virgin, HSBC, and a few other people. So what's the fundamentals here? If you look at the maths again, typical day rate contractor, let's be a very high-flying project manager here in London, $750 a day. Again, a simple example based on £9,000 worth of expenses, typical auto-enrolment pension, base salary, call it 12.5 grand. If you look at a typical approach for a contractor, as I've depicted there within a limited company, you're probably going to end up netting circa 113 grand, net of all costs and taxes, etc. Umbrella, again, if you were to go through the umbrella scenario, you're probably going to net around about 98,000 with a similar strategy. Again, there's no dividends through umbrellas, it's just salary and maybe some expenses, but again, they're very curtailed. Permanent role, probably going to get offered something, say 100 grand a year maybe, and you're then going to net down to something in the order of about 66,000 a year. So there's a massive drop in overall income. What their solution would allow you to do, if you stayed as your typical sort of grid contractor, you'd probably get back to about 109,000. So compared to probably the next best option you're going to find, which is your umbrella, which we can provide through Rodliff, but I'm not going to sell it to you because it's not something I certainly think is worthy of that much discussion. It's there if you need it. Or if you then become a grid employee stroke shareholder, you can almost get yourself back to where you are at the moment and remove all the headache for your end client and still end up netting, broadly speaking, what you're currently getting at the moment. So again, if anyone wants any information on this, I'll share these slides, but if you do, then let me know and I can connect you to the guys in that team. So what other options do you have? So, hold on, bear with me, I won't bore you with that one. Let's say you've decided you're going to close at this point. So I guess if you're going to finish contracting, one of the options is just simply close your business down, exercise entrepreneur's relief, and complete something called an MVL, Members Voluntary Liquidation. Again, if that's something you want to talk about, let me know after the event and I can run you through the options available to you. The objective there, and again, maybe I'll do a session on this next time, is to try and accumulate as much money in the business as you can, and then think about doing something with it at the back end and getting a better tax break. If you want to keep the business open, these are sort of options to keep the business alive and running. One thing you could do, you could flip the business and change its SIC code, which is the definition of what you're allowed to do with the business in terms of day-to-day trade. So you could move it to what's called a special purpose vehicle. That is something that allows you to then most likely diversify into property portfolio. So that could be going buying buy-to-lets, that could be property development, something of that order. So again, a lot of our clients tend to accumulate money in their business, then diversify into a special purpose vehicle as a complementary business to their limited company. But if we're at the end of a journey, if IR35 is going to prevent you from trading, then this could be a way of actually wrapping it all up in one company. Another way, again, we have a lot of conversations with clients, is diversify into another business. So if you want to branch out and do something different, could be anything. Talked to somebody this morning who was looking at beauty products. Got another person that's talking about setting up an institutional fund and all sorts of weird and wacky things. So if you've got something else that's a passion or you think you can make money out of it, again, we can talk about diversifying your business and allowing you to eke out into different trades. Another option could be if you're sat close to maybe retirement or you're just sitting on the fence waiting to see what pans out after COVID-19, you could just leave the money in the business and then deplete the funds over the course of time. As it's sat there as post-tax revenue, you could just sit there drawing salary and dividends and again play a tax game here to try and escape up to the high rate tax threshold or different other thresholds if you've got a different game plan. And then gradually just draw the money out over the course of time. Very good way. I mean, if you're looking at tax efficiency compared to closing down under a member's voluntary liquidation, you'll typically spend about 10% in tax on that exit. If you did it this way, your total tax would probably be a lot lower, because the maximum dividend tax you'd pay if you were going up to the higher rate tax threshold would be 7.5%. So again, it's a good way just to draw funds and sort of gradually drift into semi-retirement or just enjoying life, doing things elsewhere. Another option, which is another client of ours, is to consider investing funds that you've worked hard for into higher yielding bank accounts or accounts. As we all know, we're probably about to start seeing negative interest rates coming upon us, which is likely to result in you getting better return on your money by sticking it under your mattress rather than leaving it in a bank. The guys at Aperture, good friends of ours, they can invest your money and get a return anywhere up to 3.5% a year, which is substantially better than nothing. So again, there's the link. If you want any more info, drop me a line. Furlough scheme. So those of you that are on the call that have been unfortunate enough to have to furlough yourself or your staff, I hope we've managed to get you over the hurdle and get things all processed for you. If you've got any questions on it, if there's anything that you're suffering as a result of the HMRC processing or any turnaround times, let me know after this, and certainly can help best I can. There are changes afoot. Again, it's pretty obvious that the country can't continue to dig a hole and keep that hole digging. We're about 300 billion underwater now anyway, and for every month we go on, that's just going to compound the tax implications I think we're all going to have to face as a stark reality at some point. Hopefully not next year, because they'll need to keep rebuilding, but over the next 10 years, we're going to have to repay some of this money. So the government have said, the reality is, they've put a spin on it saying, we want to get people back into the workplace, get more flexible working, allow people to work part-time, and just gradually bring people back in from the beginning of July, and then beginning of August, and the employer will then have to start making contribution towards the scheme itself. So employees will have to see a different way in their pay slip again, which you've got to overcome. So you could end up with part-time wages, part-time furlough. Again, we are seeing what the revenue are doing to change their systemization, because this is all totally brand new and something that doesn't exist in their systems whatsoever. One thing to be very mindful of is that the scheme will not allow any new entrants from the end of June. So if you are suffering and have been thinking about furloughing yourself or your staff, the time is upon us now to think about doing it. Otherwise, there's every chance that you will be blocked from being able to move forward. Here's a bit more gory details on what that actually looks like. So first of July, employers will be able to bring staff back on a part-time basis. Again, I think that's kind of linked with a lot of the hospitality sector, whereby hopefully from the beginning of July, 4th of July, pubs are going to start to be able to open again, which would be a great relief to all of our hospitality clients and equally to everyone that likes a good beer. From August, government wants the scheme to be partially funded by employers. So we can start to see a gradual demise from the 80% at 2,500, going down to 70%, then going down to 60%. So as we start to see in October, what that's going to mean is there'll be a cap on wages of £1,875 a month, of which the employer's going to have to pay 40%, and then the balance will then be paid by the government. So 60-40. Okay, so I think that's about it in terms of where we're at today. Again, this is a very short and sweet version because I was feeling a bit ropey today. So I know we've only covered IR35. Next week, I think we'll probably cover members' voluntary liquidations and a few other bits and pieces. If you've got any sort of particular issues or things that you do want to cover, just always let me know. And now, are there any questions? Here we go. So, bear with me one moment while I read this. So somebody else, okay, so currently you have someone who's on furlough, needs to get to do 1 month's work, potentially doing ongoing work. If the month's work doesn't result in further work, can it be put back on furlough? Okay, so jumping in and out of furlough. I think the simple answer is yes, you will be able to furlough them if they do 1 month's worth of work. The problem you've got is if they're not furloughed already and you then bring them in now and then they'll pass the 30th of June, that could cause an issue. I think because they're already on furlough, they could do the work and then maybe go back on a part-time or full-time furlough thereafter. We are seeing, an awful lot of new information on this, and we're going to get Steve will be sending an email out tomorrow, funny enough, just to re-clarify some of the furlough rules. So watch that space. If there's any questions that you've got from that, just give us a shout. So I guess in summary then, what we've covered tonight is IR35 is changing. We've got about 9 months more, and then we think the writing's on the wall for the trading history as we know at the moment. Things will, no doubt will right themselves. I think we all thought that about a year on from IR35 changing as we thought it would do in April, the writing would go back on the wall because all the clients would realise that quality people jump ship to other businesses that weren't taking such a harsh stance. So let's see what happens. You never know. We might get towards the period again in April and they pull the plug on the whole thing and leave it alone. The furlough scheme, it is changing as we know. It's gradually demising and going down. So the objective there, if you've got work and you are able to step in and step back up again, just be mindful that might be the way to address things so that you don't end up dropping down to the 60% of 2,500, which would be could be an awful lot less, or dependent on your own salary that you're drawing. If your salary is a lot lower than that, then clearly you can only draw a maximum of 60% of the gross salary that you do have. Okay. Any other questions before I go and get myself a glass of water and chill for tonight? Cool. Okay. If anyone's got any personal requests in terms of things they want for next week, just let me know. Fire them across and then I'll add them to the list of topical events and things that people want to run through. Anyway, have a great evening, one and all, and take care. I'll see you next Thursday. Bye-bye.